Mark, you've segmented the tech universe in three ways: mega cap, large cap, and then small to mid cap. I want to get to that in just a moment. But why do you think now is such a time to be selective and a stock picker rather than an index buyer?
Well, I think there's two trends we all have to worry about or focus on this year. There is going to be hopefully a reopening trend. And secondly, we are having rapidly rising interest rates. So we're probably going to have that. At least that's the expectation. And when you get those expectations increase, you get high multiple stocks trade off. Look at the consumer tech land that I look at, all of the 10 times sales stocks, what I call the PS stocks, price to sales stocks, they've all corrected 10% or more since the beginning of the year. So the market and investors are saying those high multiple stocks, those high multiple, high growth tech stocks, those are going to underperform if we've got rapidly rising interest rates. So those are the two things you want to watch for. And that makes you want to be more selective. You can't buy all tech. You have to have a particular thesis for this year or a catalyst. And you probably want to be careful about the high PS stocks.
All right, let's get to, you have three in each sort of subcategory. Let's go quickly if we can. Top mega cap picks are Amazon, Uber, and Facebook. Why those three?
Well, look, all three of them have done, we've only had 3.5 trading days so far, but Uber's outperformed. Why? Because it will be a reopening play, assuming that we've got reopening after Omicron, assuming that we have that, it's one of the biggest gap up opportunities out there. So we like that. Amazon, I think, is going through a dramatic investment cycle, but there will be an R on that I. There'll be return on that investment spend. We'll see revenue growth accelerate and margins expand in the back half of last year. And the stock's valuation is right in line with its historical multiple. And Facebook has got two problems that I think it can fix. It's got this ESG discount, and I think it's addressing that through a series of steps. It's also got this Apple ATT or IDFA or policy change risk, a challenge that they had in the back half of 21. We think they'll fix that. So two problems that are fixable for a company that we think is trading at a discount to its growth rate, highly attractive valuation, not a high PS stock. So those are the three that we like in Megacaps.
So you think that some of the ESG odor that surrounded Facebook or Meta, or whatever it's called, is going to go away. Let's go to large cap. We've got Roku, Chewy, and I guess that's Spotify.
Yeah, that's right. The latter two in particular are what I call gross margin catalyst stocks. So again, you want to have something specific. What are you really holding out for this year? And both of these names, I think you've got a chance for gross margins to expand. When you have low gross margin stocks, like a Netflix in the past, the stocks, one of the things that really unlocks them is when there's a gross margin catalyst, either a price increase or a new part of the business that emerges that's higher margin, or just scale. And I think both Chewy and Spotify are going to give you that in 22. So that's why they're two of our top three picks.